Everybody, good morning. You ever have one of those days where the faster you run, the further you get behind, it seems like? Anyway. Goodness gracious. Sorry about being a couple minutes late. Got here eventually. And we've got GDP numbers coming out today. Tomorrow, look at this. PCE, slipping that in tomorrow. GDP numbers coming in a little to the good. 0.6 month over month. Final GDP quarter over quarter. 3.4. Are you kidding me right now? Are you kidding me? That's probably government spending right there. Kicking it in. That's that Q3 20 or Q4 2023, last quarter of last year. The final numbers come out about 85 days. I don't know if that's the final numbers or the final numbers that they revise later or whatever. But yeah, that's kind of sketchy if you ask me. 3.4, whatever. I mean, it's probably like 3. I say 3.1 of that's probably government spending. And that debt bubble, just keep on keeping on. So anyway, welcome everybody. Philip, Goose, John, Michael, Wade, Aaron, Jessica, Don, Sergio, Nikki, Svinborn, Donald, Ed, Anthony, Rex, Craig, Valerie, Ronald, Rob, Merle. Welcome everybody. Larry, JB, Carlene, Clarence, Nelson, Jorge, Rick, Robert, General Rush here, Thrifty, Nickel, Mary, Rongamer, good to see you as always. Kenneth, hey. Welcome everybody. Kimberly's even here, my favorite subscriber. And it's because it's my wife. Not because it's my wife, but I mean, she is my wife. Welcome everybody. Hey, Infinity. And if you want to chat with me, like all these fine folks, right over here, all you got to do, click the button right over here, right down here in the corner, and be a subscriber. And a few seconds later, you can chat. That's the only requirement. The only requirement. Anyway, popping over. I don't know. All cooked. We all know they're cooked. All know they're 100% cooked. So we've got Chicago PMI coming out in about 25 minutes. And we've got revised consumer sentiment. One of these comes out like every week. We'll see what happens there. Pending home sales. I mean, month over month. And then let's see. This one tomorrow. This one should be interesting. The market's closed. It is a bank holiday. Funny enough, it doesn't even show up here as a U.S. bank holiday. It is a bank holiday. The market is closed. And we've got PCE cooking at 8:30. And then about 11:30, we have Fed Chair Powell speaking. That's interesting, if you ask me. So, what is that? What's that going to get us? Not quite so sure. Not so sure. We could see some volatility. And I will be live tomorrow morning, just like normal. Even though the market's closed, we'll talk about crypto. I'll do crypto special. We'll dive into some of the cryptos in some of the space because, we've got this halving event thing coming up. Dun, 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 dun. Right there. About 3,341 blocks left to go. Roughly 22 days. Puts us roughly April 19th. Roughly. Keeps firming up as we get closer. Here's the blocks actually getting mined out. And not sure what I did there, but I had clicked on a block, I guess. So here we go right here. Those were only a minute apart. We just adjusted the difficulty. We went down a little bit in difficulty. We were running a little bit behind. Next difficulty change, about 14 days, roughly April 11th. That's how it goes. It's after so many blocks. I think it's every 2,000 blocks roughly, or 22,000 whatever blocks, 2010. I don't know. After those chunk of blocks, we adjust the difficulty. We went down a little bit, and that's the way it works. It's self-adjusting. We're running 10 minutes is the goal time. If we're running behind, the difficulty adjusts easier. If we're running ahead, the difficulty adjusts harder. And all that means is the miners have to, it's kind of like a speed adjustment. We do that every 14 days-ish, roughly. It's actually a block count it takes about 14 days. So if we start, you know, Bitcoin's interesting. Like there's a whole debate on whether Bitcoin's money or whether it would count as money. So think about it this way: any other commodity out there, any other commodity, gold, silver, oil, whatever commodity, the cure for high prices in a commodity are high prices. Think about that a second. As if oil ramps up in price, that motivates people to go find more oil, and the high prices enable you to drill for oil that wasn't previously accessible because of the low prices. Same with gold, same with copper, same with just about every commodity out there. Cocoa will eventually, cocoa is going to be $9,000, $10,000 a ton. Somebody's going to be like, hey, there's an opportunity there to go get into that space. And it's like a self-correcting thing. Bitcoin, on the other hand, think about this. Like, this is a totally different thing. The more people that go participate and try to mine Bitcoin, the more difficult it gets. The difficulty automatically adjusts up. So it can't be mined faster by throwing more money at it. Throwing more money at it actually makes it harder to mine Bitcoin for everybody. That's a whole different concept. Now, where am I going with this? So, gold historically, we've been placing value on it for like 4,000 years. Historically, the current supply of gold and the current mining rate, whatever you want to call it, it usually hovers right around 60 years. Like right now, at the current production rate of finding gold, it would take 60 years to replace the entire existing supply. Bitcoin right now, where it's sitting right now, is similar to gold in that it would take 57 years right now at the current mining rate and the current production, the current reward rate of 6.25 Bitcoins. The current reward, we get paid in here 6.25 Bitcoins. Right down in here somewhere. Yeah, the reward, subsidy plus fees right there. The subsidy 6.25 plus the fees. So we get paid that. Now, the halving event creates a reduction in that supply down to 3.125 on the subsidy for mining instantly. And that's coming up April 19th. And what that does is it takes us from 57 years to almost double gold. This will be the first time there's ever been anything in the history that is scarce, and the scarcity eclipses that of gold as money. So this is a very interesting thing. And basically right now, holding one Bitcoin, if you were to hold one Bitcoin, it would be equivalent. If you consider them equivalent or, scarcity-wise equivalent, one Bitcoin would be like holding 320 ounces of gold. If you were to hold 1.2, I think it's 1.23 Bitcoins, it's like holding one 400-ounce bar of gold, what the banks kind of transfer back and forth. Think about that. That's interesting to me. That's one Bitcoin, and there's 19 million of them out there, roughly. It's not an exact figure. We've got roughly 19 million, 19.6 million. There's only ever going to be 21 million. You'd be like, well, what happens when that 21 millionth? Well, we should be so lucky as to be here. Right now, roughly 6.4% of the supply is left to come online. And by 2030, we're going to have 2% of the supply left to come online. So as we inflate dollars, Bitcoin's experiencing a slowing of inflation and eventually becoming deflationary or static, actually. It's kind of interesting when you really think about it. So this halving is different than any halving before because now the scarcity of new Bitcoins coming on the market doubles gold. Think about that. I mean, and there's no way for the price of Bitcoin in dollar terms, like if Bitcoin were to go up in dollar terms, there's no way for the production to get faster. Unlike gold, unlike all other commodities out there. So if that's not something you've ever thought about, it's not something I've ever talked about, but it's an interesting thing that's about to happen with Bitcoin. And Ethereum's not like that at all. It's not capped. So this is, when does Bitcoin become old technology? But, when indeed, it could become old technology. But it may be a foundational thing that's with us for years. So we'll see what happens here. It's one of those things that I think it's going to be around for a little while. We're still only 15 years into it. 15 years old. So is it an old technology? And right now it's climbing the ladder. We're up above silver at 10 times. If we were to 10 times the price, make it $717,000 a coin, we'd be pretty much giving gold a run for its money at the market cap. Be an interesting situation. If you haven't thought about that, maybe you should. Anyway, I digress. Anyway, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, and entertaining. It is not a recommendation to buy or sell anything at all. No stocks, no options, no forex, no futures, no cryptos, no bonds, no treasuries. Don't long them, don't short them, don't trade them. If you desire personal financial advice, hire and consult a financial advisor. It's not what I do. And if you're going to buy stuff from gurus, make sure you trust them. All right. So now silver is different. Like silver is an industrial metal. Silver, most metals and most commodities in general tend to hover around their production cost. Why? Because as the price increases, this is why silver doesn't skyrocket. As the price increases of the commodity, production increases to bring that back down. Platinum, you would think platinum and palladium, super rare, right? Well, right now, I was talking about gold is at a 60-year, like it takes 60 years the current supply to replace the current supply. Like platinum is at like 0.4 and palladium's at like 0.6, I think it is. So it's like we can replace that supply quickly. And silver is down there in the doldrums too. So that's why silver doesn't necessarily blast off. It's kind of like when you start wreaking your mind around it, it's like, that's kind of wild. Anyway, let's talk about what's moving today. And looks like I got all sorts of alerts kicking off here. Alrighty. Is that the market open? Dun, dun, dun. The market is open. Alrighty. Speaking of gold, let's check her out. Nice little pop. And maybe a retrace. Let's look at GLD. Ooh, nice. Very nice. Love to see a rally on that one. Let's not just take that one back. Hey, pop it on up. The target up there, 204.81, possibly 205.94. Nice. Anyway, target for GC, a little bit above us, 22.40, possibly 22.67. Drew it on the chart, and here we are, right at the bottom of the target. Think I might do this for a living or something. Got lucky again. Broke above. In the target zone. Love it. All right. S&P. Nice pop yesterday. This one tilts our odds here. Next target right up here, 2575-ish, 2570. The target above that up here around 5300. Add some alerts. Got a nice little quick trade on XSP yesterday based on a measured bounce. And some people saw it, some people didn't. Some people didn't understand what was happening. It's okay. You don't have to make every trade that I throw out in Discord. But right there, this little pop, this little drop. Dun, 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 dun. When we broke back above, rocket time, baby. And this was just a little bitty small time frame. We'd actually have to dive on down. Pop, drop, measured bounce, popping higher. I was actually on a 5-minute chart is what I was on. It was beautiful. Right up to the 16182. too. Beautiful, beautiful. Not really moving much overnight. Even on the GDP number, we got a little spike. Retrace. And just churning. Like all night, we were just churning. Like after that big up, gave it back a little bit and just churn. Hit the roadmap line on the 5-minute. A little higher. But we go back up to that daily chart. Dun, 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 dun. Right there. 70% likely we go on up to 53.39, possibly 53.60 on the upside. Just based off of that 3-day pullback we did. 1, 2, 3. Coming back up. One of these is going to be the last little squiggle. I don't know which one. I can't tell you for sure. Crazy can keep being crazy. I've told several of you that private message me and stuff like that. That crazy can keep being crazy. When is the end? I don't know for sure. All I can do is warn you that we are getting close. Could be here, could be here, could be here, could be when NVIDIA becomes the largest company in the world. Up here around 5,500. I don't know for sure. Golly, come on. Come on. Break loose. There we go. NVIDIA, the largest company in the world. Probably going to shoot right up there if that happens. All right, that's NVIDIA right here. Retracing today. 3-day bender. But if we popped it up here, and that's back to this chart right here. Oh, nice ads. Thank you. Right here, NVIDIA, number 4. Apple, number 2, 3. And, you know, as far as companies go, 1, 2, and 3. NVIDIA, number 3. If it takes the top spot, I mean, this is assuming Microsoft doesn't move too, so Microsoft could move more. But if NVIDIA were to climb the ranks right up there, that would put it roughly about $12.50 a share. That's just taking the number of shares available. Right here. Taking your market and doing your market capitalization. Taking your shares available, free float shares, and doing the multiplication. What does it take to get to 3 point whatever trillion? About $12.50 a share, roughly. Right up there. It's not far. I mean, look, it came all this way. We might as well do the last little pop, right? Another 38%. No big deal. No big deal. Be pretty wild. Anyway, S5FI got aggressive yesterday, popping above the 80 line. That was kind of shocking, surprising to me that we saw that broad participation as we popped. So we're seeing less participation in like concentrated names like NVIDIA and Apple, AAPL. Less concentration, MSFT. Seeing these Magnificent 5, Magnificent 7. Seeing a little bit less participation. Google, one of the only ones that's set to go higher, it looks like. 161. We've got, already did NVIDIA. You know, Tesla, the way laggard. Now, Tesla and Apple actually down for the year. We look at the chart over here. Oh. What was it? Come on. Dun, 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 dun. That one. Ding, 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 ding. Right there. Apple, Tesla. Two of those magnificent 7 down. Interesting, I think. And then we see most of the rest of them, Microsoft, Nvidia, Google, Amazon, Meta. The rest of those up. Lilly, up. So if you don't use this on year-to-date performance, this tells you the stuff that's strong, and this one tells you the stuff that's being weak. Like if you're trading these names, you're destined for a grind. It's already established. 1/4, 1/4 of the year has already established that these are the laggards. If these are names you're chasing, be careful out there. I mean, there you go. There's the tickers. Right? How do you get this? It's under products, under heat maps, under stocks. Come in here, turn it to S&P 500, turn it to year-to-date performance, turn it to no group, and toggle mono size, and you've got the list. It's just 3. I turned off all the things that aren't 3% down. These are the strongest ones. These are all up 3% or more. All right. Don't hang out with the biggest losers. Don't have to continue being biggest losers, but they also don't have to turn around. These are going to be the ones that are not going with the market. All right, the S&P up for the year, and these are the laggards. These are the ones that maybe you shouldn't be screwing with. I mean, to put it nicely, I mean, don't mess around in this area. Is the way I look at it. All right. If you want to trade with the market, I like to trade trend, pullback, continuation. The trend is not, the trend for the S&P is not down. Now, I do believe we're setting up for some kind of correction. I'm very cautious on the upside, but the trend is not down. So if you mess with these, you're trying to pick counter trend some way, somehow. Now, there could be opportunities in here if they look good, but you gotta really be careful, because these can keep being laggards for the rest of the year. It's kind of historically, we see stuff that underperforms in the first quarter keep underperforming all year. Stuff that's kind of rocking it out first quarter tends to keep going. All right. Intel alert. That's not the chart I want to look at that on. INTC. Nice rub bounce. That's a potential aggressive entry there on Intel. Looking for a break above this 47 area and the target up here at 54. Love it. All right, ES ground overnight, grinded sideways. We've got NVIDIA. NQ. Look at this. Curiously, didn't see that big upside performance. We just popped, but we didn't get above that 618 level. In fact, we set a new lower low. NQ tipping its hand that it may break below this trend. This is our biggest, strongest companies. We're seeing the biggest, strongest companies show some weakness. Something's up. This might fail. I mean, actually, this could pop while NQ started rolling over, and then this could fall victim to the biggest companies flushing down the toilet. We can see rotation out of those biggest companies. In fact, it's probably money flowing into the financials ahead of earnings coming up in 2 weeks. And Russell here. Is this the last-ditch effort on this rally? Or are we going to try to break out and go significantly higher on Russell? It's an interesting chart here. It's very choppy and overlapping. I almost expect one final try to break out, and then we crush it. It's actually kind of what might be setting up here. Might be a trap, for lack of a better term. we get super bullish, we pop it, break out of this zone, break out of this consolidation, get everybody super hyped up, and then rip everybody pretty hard. That's what it looks like is about to happen, because this is not a bullish continuation pattern. This is very choppy, overlapping sideways on the Russell, and that's IWM right there. Bum, bum, bum. Yeah, we're not getting a puppy. Sorry. CL showing strength. If we break above this high over here, probably heading on up, cruising on up. 86, 85, 86, 87, right up in that zone. I like to not have this on log mode, so 85 would be the target. 85.50, 86 possibly, right up in there. That's the next target. If we're going full bull, this is your warning. If we get up to 90, do a consolidation that holds a high consolidation, we're probably going on up even higher. 105 is where I expect us to actually go this year before the end of the year. Right up here where this confluence of levels, right up there. I expect us to get up there sometime this year. 105. And possibly, if we're going to break out, get above that level, we may actually go on up. But those may take longer than this year. So 150, 170 could get pretty spicy in the oil market. Gold showing that strength. Gold showing that strength. I was ignoring the chat, but about a puppy, but we're not getting a puppy. Gold came right up close. Is that the touch? I don't know. I do have a gold trade on, so I'm slightly concerned that we would retrace. I would really want to see this extend higher. BTC, Bitcoin, looking like yesterday. Nice pullback. Interesting here too. We're seeing continued buying of these Bitcoin spot ETFs, and right after the market closes, we get a huge sell on Bitcoin futures right before. This is interesting. Right before those ETFs have to rebalance and buy Bitcoin. So we're seeing price suppression via futures in Bitcoin right before the ETFs acquire their Bitcoin for the day. That's like a pro move right there. It's like, I think that's actually, you want to talk about manipulation. That may be manipulation in a relatively illiquid market. There's not a ton of supply of Bitcoin flying around right now. So that's price suppression. And we rinse and repeat almost every day lately. I mean, for days, we're seeing the same pattern where we get an afternoon selling pressure right into when they acquire new Bitcoin. Some days it's bigger, some days it's smaller. It's an interesting pattern that's shaping up. And we're 70% likely right now. Not even sugarcoating it a little bit. 70% likely to pop this 77,000, 78,000 level right up here. Nice swift pop. And then if we're going to get super bullish, we'd move up to 82 above that. Ethereum, though, still holding below that 618 level, still indicating a bearish potential move. Watch out for resistance right here between 37 and 3,900. Dollar. Nice rejection right there. It was trying to be sparky yesterday. Got slammed back down. And we'll see what happens here. 70% likely we're going to pop up here, though. 105. MSTR. That one's creeping on up. Going to retest the 2,000 area. 2,500 above that. RH. Watch out for MSTR. It's due for a correction. Some wicked kind of correction. RH. That is a choppy sideways chart. Expansion of range. It's like and then dying down in the middle. Nothing entirely, and nothing very clear here at all. That was the lowest low. Coming back up to this. Wow. That is mucked up a pattern right there. I don't even, like, I can run that low to high, but that's the lowest low, so that doesn't actually mean anything. And all you've got right now is this move up, this retrace, a potential resistance right up here. That's about all I've got at the moment. We've got these prior highs in this consolidation zone. Look at that. That zone, resistance, resistance, minor resistance, support, crushed it, resistance. Now we're there again. I'd be very cautious. We turned down again off of that one. AVTX, talk about a dumpster fire. Whew. That's got to be the biggest split I've seen. Reverse one for 240 and still looks like it's going to go in the toilet. Holy cow. Rex. Dun, 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 dun. Nice pop. Let's see, that high, that low. Resistance 54, 57 above that. BCG. Probably going down to a lower low. See that low, that high. Puts us down to $2. Sizu. Kazoo. There's another dumpster fire. One for 100. That's, look at that, back to back. That one over there, one for 20. That wasn't good enough to keep us going. One for 100. Holy moly. That's like, combine those together, that's one for 2,000. Like if you used to have 2,000 shares, now you got one. EL. Still at that resistance, lower high. Caution, we may drop down to 87. Coin. Popping. Popping a little bit, but still in that resistance. I would like to see this retrace to the roadmap line. Really would. I'd be hunting a position here. Otherwise, we've got to get through this resistance. It's a, why is it dark? Because it's a very defined resistance between here and there, and we may turn down from this resistance and go lower. We could make a top anywhere in here and turn lower. Very cautious. I would rather see us bounce right off, come down here, find support, turn back up. I'd feel more confident that we're just going to blast on through than consolidating right here underneath it. That's not my favorite way to go about breaking through resistance. Snow, I still expect a lower low. This was still a very corrective pattern. This would still clean this all up if we could just push down one more time, make a low right around 100, then we can be off to the races. Maybe like 60. That's $60 down. But look how far we dropped right there. We dropped 80 already. What's another 60? ALTX or ATLX, excuse me. Yeah, that looks pretty, getting a little pop, but that looks pretty garbage right there. 2, 3. Let's see what we got on the correction. It's that same pattern I tell you about. Like, what goes up? Looks like we could head back to 444 before we find support, somewhere around that $4 or $5 area. It's just a 1, 2, 3. That would be slightly higher than the lows before. Yeah. What pattern am I talking about? This pattern. What goes up typically comes down, especially if it goes ridiculous. That went ridiculous. No reason for that. It's the same pattern. Ridiculous up, consolidation. Just got a reverse split. Yeah, look at that. One for 750. That's probably eat my own hat right there. One for 240. One for 750. Look at that. Talk about a piece of garbage. Can they turn it around? Well, I guess maybe. They lose a lot of money. Probably going down. I would expect. Well, not negative, but I have to put this in log mode and delete my oval and put it back on. Log mode, that could be the bottom. Jeez, man. It looks pretty gnarly. Classic support zone, but watch out for busting down lower. Yeah, that looks pretty garbage. That's a garbage company, but that doesn't mean you can't make money with it. But I wouldn't mess with that, honestly. I don't plan on messing with that, I should say. Pick, same sort of move, potentially holding. Look at that, 1 for 5. All these dumpster fires showing up today. You know it's crazy when dumpster fires show up as the biggest movers of the day. Meme stock, bull crap stuff. BitX, if Bitcoin's going to continue higher, that one's going to launch off. And right now, we've got about 70% likely we're going to go hit 64. I have I don't know, I got some shares of this with a $60 sell order. So if we pop a new high, I'm out. Winner, 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 winner. WNNR. Andretti acquisition. I have no idea what they're trying to acquire, but it's a SPAC similar to like what DWAC was. We typically see this volatility, especially when they announce what they're trying to acquire. And then if they go public and do the merger thing, then we'll see some craziness. But it's just like IPOs. They typically go lower. So nothing to do here. I'm not even... It looks like Zapata. Whatever they're trying to acquire. Blank check company formed merger with Zapata Computing. I'm guessing that's like some sort of AI play. Would be my speculation. GCT. Probably coming back to the roadmap line. W. I don't really care about 52-week highs. W just chopping in this big squeeze. ARKB. Just kind of chopping. Going with Bitcoin. That's a spot ETF. SMCI. Be careful. It's kind of filling out this head and shoulders pattern. Zoom her up. Zoom her up. Zoom her up. Man, so skewed. We can't even get it show up here properly. There we go. It's just kind of craziness. I mean, you could even reset this over in here and put this down here if you wanted to. It's got this kind of crazy pattern going on here. We break below that neckline. Could be like a watch out below situation. To watch for this to break down below this 900 area one more time. It could flush pretty big with the head and shoulders. But, you know, head and shoulders patterns are like 50-50 kind of. I don't find a high reliability in them, but when they show up, when they do work, they usually go to the target. They're 50-50 on whether they actually go, whether they activate. But a lot of times we see a fake out, especially if a lot of people see it. We'll see. If it starts making mainstream media, we'll see a lot of people counter trade it. Like people are going short, and then we'll get this rip like this. If this kind of pattern hits especially if it hits something like CNBC or something like that, and they're talking about the head and shoulders pattern on SMCI, then we're probably going to rip it. But if nobody talks about it and nobody points it out, then sometimes they work. And for this one right here, head to the neck, off of wherever the break is. Could put it down around 600. Not far away from the target zone right there. GCTS has 2 candles and can't really do anything with that. SNX looks like that wants to come back to the roadmap line. MLKN, that was definitely a trip back to the roadmap line and maybe going lower. Let's just remove all the drawings. This tool 1 point, 2 point, 3 points right there. That could be support. That could be the 3-wave correction. Possibly down to 2250 even. Wouldn't really, if we're going to turn more bearish, we may see a full retest of this over here, this gap down. Yeah, that's MLKN for you. Reddit, RDDT doesn't have enough candles to do anything, but IPOs are bearish. Eventually, we're going to end up down here somewhere. Could be substantially lower. Somewhere down here, we're going to find a bottom below the lows we made right there. CC, that's bearish. PI, Polaris. Had a target down here. We haven't hit it yet. Yep, still sets us up for the target. If we turn down here, if we start, well, we got a lot of work to do to go higher. But if for some reason we started breaking higher, retesting the roadmap line on a, that roadmap line pointing down pretty definitively. Nothing there for me. Not even worth messing with. ARM is probably going to retrace this whole move at some point. That's back to the complacency market psychology chart over here. We're in the complacency period. Watch out for the retrace on ARM. All right, that's kind of the list today. Not a lot moving. And I think we're 70% likely to go higher. Now, it doesn't mean we're going higher today. Doesn't mean we're going higher tomorrow. We're 70% likely to go higher, though. These targets right up here. Here's the zones. We've kind of set the stage, set the table, invited everybody over. Is it today? Is it tomorrow? Is it next week? And it's probably going to be next week. Remember, tomorrow is a trading holiday. Make sure you got your options for the week covered and colored smothered. I forget the way Kimberly likes her hash browns at Waffle House. If you've never been to Waffle House, it's funny to listen to them order hash browns. Anyway, thanks for coming, everybody. I'll be back again tomorrow doing crypto special. And if that's not your bag, that's cool. I'll be back doing this again on Monday. Same bat time, same bat channel, 9:15 before the market opens. I'll see you there. There you go. Covered, smothered, capped, and peppered. There you go. All right, everybody. Have a great day. We'll see you on tomorrow. See you tomorrow for crypto special. Bye for now.